Hello, this is Vance, and this is Thursday, September 17th, 2015. These are the CL trades for today using the slow hand method for price action. Today was the FOMC announcement. For those of you who don't know, it's the Federal Open Market Committee. Minutes were published today. Announcement based on information from July. And as a result, there today trading on this particular day, because the announcement was made at 2 o'clock Eastern Standard Time. Generally speaking, in the afternoon, particularly in the equity markets, things start slowing down. S&P certainly, and has an effect on the crude oil markets, waiting for those announcements to come through. Now, really, what the Federal Open Market Committee meets to do is to set monetary policy. And for those of you that are familiar with monetary policy, there's really three ways in which you can do it. One is by increasing the money supply, by issuing bonds or by printing more money. Treasury bills, issuing treasury bills, selling treasury bills. It can increase the discount or lower the discount rate, which is the amount that they charge interest for other banks, because the Federal Reserve is the banker to all the banks. So that's we have in the United States is the Federal Reserve System. And lastly, to change the reserve ratio. And what that means is that all banks are required, they can, with the stroke of the pen, increase or decrease the amount of specie or capital or money that banks must hold in reserve for depositors. And by doing that, that affects the money supply. It's a multiplier effect. So generally speaking, the broad stroke is if there's anticipation, if there is a lot of inflation, they will typically raise the interest rates and reduce the money supply, because to put a damper on rising costs. So they'll raise interest rates in periods of inflation. In periods of stable or reducing inflation or less economic activity, they'll typically lower the interest rate and reduce the reserve ratio to put more money in the system. But in both those cases, it is really it's a real shock to the system, because overnight you can increase or decrease the amount of money that's in the system. And so that's why it will have an effect depending on what the announcements are. The last way is that when the Federal Open Market Committee meets, when they make announcements, they put through a series of projections. We think the economy is growing, it's going to shrink, it's this, it's that. We're taking all this information into consideration. That's through the lip service. So by making this announcement where we're thinking it gives the markets, perhaps potentially give the markets more comfort, or give the markets a signal to what the long-term outlook is, the Federal Reserve System, and what they're going to do in the future as far as the money supply is concerned. So markets can respond to that as well. Regardless of how it really turns out, what it really represents is that when you'll see rapid movement in most markets, equity markets as well as the oil markets in particular, and the gold market, right at before the announcement. And that happened today. And so the cautionary note as far as trading commodities is concerned is to, as it approaches the announcement day, it could be all day, but particularly in the afternoon as we approach the announcement, prices will have a tendency to maybe behave a little bit more erratically than it does on just regular normal trading days. And that's something to keep in mind. So movements may not be as predictable. So trends may not last as long, may cut short. We might have more volatility. It could have less volatility. Anyway, it may be a definite change in how things happen. And it probably happened today a little bit. I'll talk a little bit about that as well. Up until let's say 12:30, 1 o'clock, it was a pretty standard trading day. There's a couple things to take a look at, a couple of pretty decent moves. I'll go over what I saw as far as trading was concerned, and we can have a little bit of a talk about that. And I'll talk about the Federal Reserve or the Federal Open Market Committee meeting, and so you can see how that affected things later on in the trading session. So let's go with that. The first thing I drew is this overnight range, or this overnight trend. And if you look at it from this perspective, let me just kind of make this bigger. Okay. This is the overnight, a couple of swings. I mean, you really want to try to get the best fit. I think it's pretty steep here. Catch the most touches along the bottom and replicate it and put it up here. It really wasn't like this the first two swings. It was too wide, so he just narrowed it up a bit to here. And so when price got down to this level, I mean, this is around 7 o'clock. I wasn't here, but you see there's a break of this trend channel. We have a pullback. This, you almost the second entry. This is really a second entry. Not a second entry, pardon me. A breakout pullback. It looks like long. Here's a second entry right here. Price makes a new high, or a new high here. First entry, second entry that didn't. This would have worked, but the problem with this one is it's right at the bottom. I mean, it's the bottom of the channel, but more importantly, we really had a break of this trend. Now, this would have worked had you taken that, but what I don't like about it is like you got these bars stacked up here. It does go down lower. It doesn't quite make the daily low, but it comes out here. And as you notice, the daily low wasn't exceeded. You see, when the low was from the overnight, never really got down to there for the rest of the session. So it climbed up out of there. So second entry short right here. We have a second entry long, which failed, and you really don't know what's going to happen. So I think it's really best to wait. You really would like to see maybe test this area or see if there's more of a bottom, especially across here. Maybe wait for prices to really test here, particularly with a strong move down overnight. Now, the movement overnight really may not have as much of an influence because once the 9 o'clock hour comes around, prices really start moving rapidly after that. But so you can get a false sense of what direction having from the overnight or from the overnight. There's not as much volume, and of course this is in a long period of time. Now, price does break through. Price oil increases, breaks through the trend channel. We have a first pullback to this. It makes a bottom here, pulls back, and now we have this double bottom here. So we got these two bottoms, and this is a second entry long right here. Looks like there's support, and I think this is worthwhile. This is a worthwhile trade to take. Now, you've got room to get out to these ones. You don't know what's going to happen here. You don't think it's going to take it all the way back up, but you can see that this area is, you've got room to get out to these double tops here. Let me just right across this top. Let me get my box here. 15 ticks. You can see that. So there's room to get out. We've had this as a second entry long. There's some support from this area. If you really, you could limit it in here, like you put a buy order right down here. But that's really a much more aggressive position to get you below most of this over here. But you don't have this, by the way. You don't have any of this. I mean, at least I didn't have this. Okay, you don't get that till later on. So you're really looking at now, once price makes this turnaround kind of pattern, reversal pattern, you think that we're going to maybe test their overnight highs, or at least come up to this area once it breaks through this area here. Now, there's not really any place to go. Here's a breakout pullback long right here from the top of this channel, but again, you don't know if it's really setting up to continue, or is it going to maybe turn back in this direction. So it's probably best off to wait. Now, it would have worked out. Maybe more aggressive trader would have taken it, but you can see this long bar here. We have this pullback, and then it kind of really springs out of here. So it takes a lot of buying to push prices like that. Now, you could have taken that trade. It's a very more aggressive trade, and you can see that would have shot your way up to this area right here. This is really this is just at 9 o'clock when prices open. So you can see they really moved up very rapidly and took up back virtually all of this area right here. So that's kind of significant. It comes more into play later on in the day, but sorry about that. My door's open, so probably hear that plane kind of go over. So you have this area right here. You've got it double tops right to this area when it makes its way up. Now, do you take a short right here? Now, it is, price does move up, pulls back the first time, pulls back the second time. You could have taken an aggressive trade. You're quite a ways away from the EMA. You've got lots of room to get out to get back to the EMA. You can see it from that standpoint. So you could have taken that trade. This is a second entry short from off of here. A first entry here, second entry short, or even like two failures. Price goes up the first time, fails, tries to go up a second time, immediate failure. You got lots of room to kind of get out to this area to maybe retest this area, but you don't really know. So it's probably, in hindsight, obviously it's easy to see. And a more aggressive trader would have taken that. Once it gets, but price comes down to here, you see it breaks this channel the first time. Now, this is a first channel. This is really a second entry short from here, or long, I mean. First entry, pull back, second entry, but that's a long push down here, and you don't know really if price is going to continue on down, especially with a real emotional move like this. Price comes down to here, pulls back, and then comes back down here right to the tick. And this is a good place to go long because now we've had this breakout. We have a pullback almost to makes a new low. And if you look at Max Rolls, he says this is a pretty decent trade to take from that perspective. The other thing is that maybe you're looking for a measured move off of this one. So if you're looking for a measured move, you see the first pullback will be second pullback, and maybe you're going to get to that second measured move. And we're on that way until it gets to these double tops. And you can see once it gets to these double tops, you see we have a failure right away. Can't get up any further. So it moves up to here, pulls back, and again, another second entry short right here. Now, I didn't mark this one because I was thinking that, right at the top of the channel, it's just been confirmed. It really hasn't been confirmed, actually, because I put this across the top here for maybe the top of this channel, but I also put in this right here. So I'm trying to kind of put in a line right across these tops based on these first couple of swings down here. So you see I made a couple of swings down here like this. And then I try to move it up here. And if you look at it, it moves it up, for here. You don't know if it's going to hold or not because you really haven't had any confirmation of this. So I was thinking that maybe this is going to be a slower or wider channel on its way up, but also keeping in mind that we've got this this double top right here. So you've got kind of like an intersection of these areas right in here. This is a little bit higher. This is a little higher still. So when you fit it in there, you can see that price really respected this area right through this. And so I was thinking that maybe moving this channel, when price does come back down here and retests here, maybe hold. And it does hold for a couple of moves, but then when it makes, when price starts to fall off in this area, it starts moving down a little bit more rapidly. So we'll talk about that later on. Here, this is long. It would have worked out. Second entry short. This one would have worked out as well. Price came up here, second entry short, but it really hasn't broken this channel. You're probably better off to wait. And you did get another signal right here, thinking that we're going to retest. And if you waited for that to close, you didn't quite get there. So this is really kind of a failure. But see these bars stacked up there? Not a great trade to take. You don't have a heck of a lot of room to get out. I mean, you've got like 20 ticks to get to this bottom here, and you can see it didn't make it. Comes back down here before it breaks the channel, runs back up here again, pulls back versus the first entry, pulls back. This is really a second entry short, but you go short on this one with the stacked up bars. The only way you really get into this trade is if you put in a limit order and you put your stop as high as possible. So you put your stop above these areas right here. You might be okay from that perspective. You see it does work out. It's going to turn back down, and you can see it does turn back down, hesitates right across where this area is. If you look at this area where this line is, this midpoint line basically, pulls back first time, fails, pulls back again, stacks up, and then fails. And you can see that this here is like a measured move. So price comes back, pulls back, first pullback, fails, second pullback, and then immediate failure. You can see that it was really a measured move to the bottom of this channel. So you think this channel is going to be coming down in this area. So now when you've got these three bars right across here, across these tops, you can really put this channel in here and really look about what's going to happen down in this area. Now, after we had this move, first down, second down to here, second entry long, I marked this one in green. It's a pretty decent setup. It's near the bottom of this channel. Looks like there's support. We've already had the measured move, as I showed you. This is the first move down. We have the first pullback, fails, second pullback. And you can have a move within a move. So you have this measured move down to here. It recovers up to this area, pulls back again, first entry, pulls back, second entry long right here. Now this is the top of the channel. I'm looking at maybe a measured move in this direction now. So you have your first move up. Okay, let me just move this, mark this. First move up, pulls back down here first, pulls back down to here. And if you look at it, maybe it's a little bit deeper. There's enough room to get up here. Now, more aggressive, that's why I marked it in green. It kind of overshot. Notice how it kind of touched the center channel line here, and then it fails right away. So now you've got this first entry, pulls back second entry. You can take a short here. I didn't mark this one, but this is another trade that would have worked out. You close above the EMA, but it looks like we may come back and test this area. It does, creates a little bit of hesitation. It crosses double bottom here. You can see this double bottom here right across this area. Pulls back, and then it fails and continues to fail out. And this is another significant thing, because now I draw this channel in here off these two swings. So now I try to draw this channel through this way. See how this is going to hold. Duplicate it. And is it going to be through here? Or maybe through here. Maybe there's just an overshoot. But anyway, something like this. Channel in this area. Now remember, we're approaching that FOMC is today. That has to be keep in mind. Now, when you look at this trade from up here, this short, which will perhaps work. I hope this is clear to see. We have this first move down here. Now remember I said this is a move within a move. So now we have this move down to this area. If you look on a broad basis, you have this first leg back, pulls down to here, and another leg up to here, and then another failure. And if you look at it from this area, notice where we came back down here. Here's the second leg down. And of course, within this second leg, there's another move. First leg back, pulls back here, down, up, and then fails again. And you can see again. So there's two ways you can see this. When the market does something twice, and it does something else, it may in fact go ahead and do the opposite. Now we're into 12 o'clock, and there's a couple more. We have this kind of a spikes down. We have another channel. A couple of trades are in here. Here's a second entry short right here, which would have worked. We have a break of this trend channel. We have the pullback and second entry long right at this bottom. So now we have a new double bottom forming here. I don't know if it's going to go down any further, but that's pretty much the last of it, because now we're approaching 1 o'clock, and really at 1 o'clock, for the last hour before the announcement, you have to be cautious. So as you can see this is 2 o'clock. Notice what happens when the 2 o'clock hour comes up. Price comes up here, and this is from here. This is 2 o'clock right here. And this is 2:05. So look at this movement from here. From 2 o'clock to 2:05, we had this range of 47.58. So we had 100 ticks in here in 5 minutes. Went up, came down, took back 50 ticks, come back down here. I mean, here's a second entry long, but man, you have to have such a wide channel. So, but it does shake itself out fairly rapidly. So right here, it's 2:30, 2:35. So from here to here, this is 5 minutes, and then it kind of really slows down and it kind of settles itself out. And that's pretty much it. So for the rest of the day, right now it's just after 4 o'clock. So you can see once we got into this, once we got the announcement, prices really moved sideways. Is it a positive or is it a negative? I mean, it's really neutral. You can see it's really a range, a wide range, granted. But as you can see, price really wound up almost exactly where it started, right here. So I mean, it started out here when the announcement was made. If you have your profile like a TPO, you see like your pricing would be kind of like this, like a big a bulge right here. And if you look at it from the perspective of most of today, you could see that same kind of idea is that most of the trading was between the 47.60, where the high, the 47.71, and 46.33. So basically 130 ticks on a broader range. So I mean, this would be like a market profile. This is what it would look like as far as a bulge is concerned. And that's pretty much it for today. So I mean, there's some decent trades if you got on the right side. I mean, these are some pretty dramatic moves. If you're fortunate to get up here, pretty good move. This is a pretty decent move. You don't need a lot of. You only need one or two of these things in a day. You don't need to take every single trade or see every single one. Because you don't miss. You can't take every single trade. But if you're looking for these setups, you're aware of it, and to exercise patience so that you take the very best trades, then you should be okay. Anyway, that's it for now.